A Bitcoin at $1 million per coin. It sounds insane, right? But when you look at the fundamentals, history, and where global money is headed, it's not only possible, it might even be inevitable. In today's video, I'll give you 20 powerful reasons why Bitcoin could reach $1 million per coin. We'll compare it to gold, look at what the biggest institutions in the world are doing, and uncover the network effects that are driving Bitcoin forward. By the end, you'll see why some of the smartest investors alive believe Bitcoin's best days are still ahead. This is wealth velocity. Unlike dollars, euros, or yen, which can be printed endlessly, Bitcoin has a hard-coded limit of 21 million coins. That's it, forever. Think about it. The US alone printed over $4 trillion between 2020 and 2021. Every new dollar weakens the ones already in your wallet. Gold has scarcity too, but miners still dig up around 3,000 tons every year. Bitcoin is even scarcer. It's the hardest money humanity has ever known. Scarcity is what drives value. In 2012, Bitcoin was a hobby for techies. Today, it's being embraced by giants. BlackRock, the world's largest asset manager with over $9 trillion under management, has launched a Bitcoin ETF. Fidelity offers Bitcoin trading to its retirement clients. Goldman Sachs now trades Bitcoin futures. These aren't small players. When Wall Street goes in, they don't buy $500 worth of Bitcoin. They move billions. And when they do, price has no choice but to climb. Michael Saylor and MicroStrategy rewrote the corporate playbook by buying billions of dollars worth of Bitcoin for their treasury. Tesla famously bought $1.5 billion in 2021. Square, now Block, did the same. If other corporations follow, and they are, the floodgates open. Imagine if Apple, sitting on $60 billion in cash, put just 5% into Bitcoin. That single move could send shockwaves through the market. Remember when eggs, gas, and rent all doubled in price in just a few years? That's inflation. In Turkey, inflation hit 60% in 2023. In Argentina, over 100%. People are waking up. Fiat money loses value over time. Gold used to be the hedge, but it's bulky and hard to move. Bitcoin is gold 2.0. Scarce, but also digital, borderless, and instantly transferable. In a world where governments keep printing, Bitcoin becomes the escape hatch. Every 4 years, Bitcoin supply issuance gets cut in half. It's called the halving. The last 3 halvings in 2012, 2016, and 2020 all led to massive bull runs. Why? Because while demand stayed strong, new supply dropped. Imagine if every 4 years the gold mines of the world suddenly produced 50% less gold. Prices would explode. Bitcoin halvings guarantee programmed scarcity, and history shows they light the fuse for the next rally. El Salvador made Bitcoin legal tender in 2021, and countries like the Central African Republic followed. Meanwhile, millions of people in Nigeria, Argentina, and Venezuela use Bitcoin because their local currencies collapse daily. This isn't just speculation, this is survival. For billions of people without stable currencies, Bitcoin is a lifeline. Global adoption means global demand, and demand drives price. Gold's market cap sits at around $12 trillion. If Bitcoin simply matches that, we're talking roughly $600,000 per coin. But Bitcoin has key advantages. You can send it across the world in minutes. You can divide it into 100 million pieces. You can store billions securely on a USB drive. Gold can't do that. Bitcoin doesn't just compete with gold, it improves on it. That's why so many call it digital gold. And if it overtakes gold, $1 million per coin is within reach. For years, critics said Bitcoin was too slow. But with the Lightning Network, Bitcoin can now handle millions of instant, nearly free transactions per second. In El Salvador, people buy coffee with Bitcoin using Lightning. Strike, a fintech company, is building global remittance systems on top of it. The more useful Bitcoin becomes for everyday payments, the stronger the case for mass adoption. Over the next 20 years, trillions of dollars will pass from baby boomers to millennials and Gen Z. And guess what? Younger generations don't want gold or bonds. They want Bitcoin. Surveys show over 60% of millennials prefer Bitcoin over gold as a store of value. As this massive wealth transfer unfolds, huge capital will flow into Bitcoin, pushing it toward that $1 million mark. Big money needs big security. For years, institutions hesitated to buy Bitcoin because they didn't know how to store it safely. Today, companies like Fidelity, Coinbase Custody, and Bakkt offer insured, regulated storage solutions. That means pension funds, sovereign wealth funds, and insurance companies can now invest billions without worrying about private keys. The safer Bitcoin becomes to hold, the more big money will enter. In 2021, Canada approved the first Bitcoin ETF, Europe followed, and in 2023, BlackRock filed for a US spot Bitcoin ETF. When these products hit the mainstream, anyone with a retirement account can buy Bitcoin with a click. Accessibility changes everything. Just like ETFs made gold investment explode in the 2000s, Bitcoin ETFs could be the catalyst for trillions in new demand. Bitcoin isn't just money, it's a platform. Developers are building new layers like Taproot assets and ordinals. Financial companies are creating ways to issue bonds and tokens on Bitcoin. This constant innovation makes Bitcoin more than just a store of value. It becomes programmable money, with new use cases that expand its reach and value. As block rewards shrink, miners receive fewer coins. They're holding more instead of selling. And as transaction fees rise, miners can cover costs without dumping large amounts of Bitcoin. That means less selling pressure in the market, which naturally allows the price to climb higher with each new wave of demand. From the US debt ceiling drama to banking collapses like Silicon Valley Bank, trust in traditional finance is shaky. In times of crisis, people want assets outside government control. Bitcoin is borderless, censorship-resistant, and decentralized. Every time a government prints too much or a bank fails, Bitcoin looks stronger, and crises aren't going away anytime soon. Fear of missing out drives markets. In 2017, retail mania pushed Bitcoin to $20,000. In 2021, institutions joined the party, and it hit $69,000. Now imagine the next cycle with BlackRock, Fidelity, and governments involved. As Bitcoin climbs, FOMO kicks in harder, pulling more money in, creating a feedback loop that drives it higher and higher. Governments are realizing they can't ban Bitcoin, so they regulate it instead. The US, EU, and even China are creating clearer frameworks for Bitcoin. Legal clarity is fuel for adoption. Once investors know the rules, they dive in. Each step toward regulation legitimizes Bitcoin in the eyes of the world. Bitcoin's network is stronger than ever. Its hash rate, the computing power that secures the network, has hit record highs. The stronger the hash rate, the harder it is to attack. That makes Bitcoin the most secure financial network in history. Trust and security is what underpins trillion-dollar valuations. Every year, migrant workers send over $700 billion home to their families. Companies like Western Union skim huge fees. Bitcoin, especially with Lightning, does it faster and cheaper. El Salvador is already using Bitcoin for remittances, saving families millions in fees. If Bitcoin captures even a fraction of this global remittance market, demand will skyrocket. Fiat currencies are designed to lose value. 2% inflation per year is considered normal. But Bitcoin is the opposite. It's deflationary. Over time, as more people hold it and fewer coins are mined, supply tightens. Think about it. Dollars guarantee loss. Bitcoin historically guarantees growth. Where do you think people will put their money in the long run? Finally, Bitcoin has the most powerful force in technology, the network effect. Every new user makes it more valuable. Every company that accepts it makes it more practical. Every government that regulates it makes it more legitimate. It's the same story as the internet, social media, or smartphones. At first, adoption is slow, then it explodes. And once it explodes, it's unstoppable. That's how Bitcoin could become the world's first global reserve asset, worth $1 million per coin. So there you have it, 20 detailed reasons why Bitcoin could one day reach $1 million per coin. From scarcity like gold, to adoption by BlackRock and Tesla, to unstoppable network effects, the writing is on the wall. The big question isn't if Bitcoin will reach 1 million, it's when. What do you think? Will Bitcoin hit 1 million in our lifetime, or will something else take its place? Let me know in the comments. If you enjoyed this breakdown, smash that like button, subscribe for more financial deep dives, and hit the bell so you don't miss the next one. Thanks for watching. And remember, we're still early.